What's good, everybody? Today is September 9th. There was two really clean biases on the chart that both ended up playing out in their own kind of way, and there was a really clean short setup that I didn't end up taking. So without further ado, just hop in and dissect some really interesting price action of the day. All right, so hopping on the chart, let's start with some top down, right? So it's really important to look at what we've been doing, and I always say this stuff, but we have to look at the bigger time frames first and just go through narrative from there, right? So on the daily time frame, we've put in this kind of SMT right here. So on these two highs, quickly marking this out, right? And if you look, we're right back in turtle swooping this high now on the daily, and then we're also tapping into that daily change at the state level. So to mark that would be somewhere like right about where it would be right here to here. Yeah, so something like this, right? This is where we put in our daily SMT. Now zooming into the lower time frames, so the 4 hour, we ended up displacing lower right here and putting in this bullish SMT yesterday. Well, I mean, this was Friday actually, right? So bullish SMT goes in here, and now zooming even lower to the 1 hour, we see that we displaced massively through this low, and then we left this really huge imbalance in the leg, right? And we have to understand that if this imbalance is going to start sending price lower, and if this SMT is now going to get ran through, we can expect price to immediately reject off of this imbalance once it opens in, right? Yesterday opens no news Monday, it rebalances to that change of state level, and then does a whole lot of nothing, right? It literally just sits there, and even NQ over here ends up pumping a little bit and getting very close to this external draw right here. So going into today, I was pretty confident that now I'm expecting to go ahead and see this external draw get taken maybe sometime today or maybe tomorrow, right? If price action wants to act efficient today, it'll usually take that, right? So in this leg, the areas which we want to maybe see get retraced to, if we're looking to take a bullish setup, right? We want to see maybe some kind of low get taken within here. We want to see all this generated liquidity get ran, see this low get taken, and then we can look to go ahead and trade back to the upside. We can target all of this buy side liquidity, 1, 2, 3, like pretty much resting relative equal highs up here, right? So buy side liquidity. Now, looking at this, right, we have all of that liquidity. The same low over here would be right about here. We saw SMT there, so now I'm going to mark this one out. This becomes our sell side, and then our buy side highest level becomes this right here. So now coming into the day, it was really interesting because we had two biases, right? So I saw this first initial bias where we have this low right here, SMT at this high. So drawing this out quickly, we see SMT at this high. So now we have another SMT in line with that bigger time from SMT. That potentially gives us confidence to go ahead and trade the downside. So SMT goes right about here. And then as well, we had this SMT. So it was, I believe, right to here to this initial low. And this was before market open, right? So zooming lower, say 15-minute. So the initial SMT was right about here, right? So it's from this low within the low resistance liquidity to about this low right here. So drawing that out quickly will give us some similar effect to something like this, right? And the whole reason that this really doesn't end up meaning anything except for this first initial moments of market open are because if we zoom out, we're marking that on a low resistant low within this potential low resistance liquidity run that's getting set up, right? Looking back, we see the SMT, we see everything we need to now go ahead and take a trade to the downside, but we didn't have displacement until market open, right? So zooming lower, say, let's look at the 15-minute, right? Have the SMT against us. I'm potentially looking for some kind of push up to this high, right? And then after this high, I recognize that now becomes turtle soup to go ahead and look for a trade back to the downside to go ahead and finish this off, right? So that's what I'm looking at going to the open. If I can see that high get swept, I'll look to take some kind of short. And if I don't see the high get swept, and if I see it instead we trade up towards it, then I'll be looking to take that long if we manipulate at the lows first, right? So on open, NQ over here ends up just pumping. So let's check this out. NQ pumps, getting very close to that external draw, and I believe we take out this internal high, right? And to me, no, we may place equal highs with this internal high rate, so I don't like that first off the bat. Second of all, when we don't take that, right, and we place in an equal high with this one, right, and we don't take our overall bigger time frame high that I want to see to make a clean turtle soup on the higher time frame model, I'm not looking too interested in trading this to the downside, right? Because check this out, displacement, rebalance. Now if we check this turtle soup, right, if we sweep that now gives us confidence to go ahead and take the trade to the downside. However, there's no reason to take it unless we get a clean sweep above here, right? We can't just look at this and say, okay, well, it took some of the lower resistance liquidity, now let's go take a trade, because then you take a trade at this point and you maybe get lucky and you maybe get this banger to the downside, right? But it's not what I'm interested in trading, right? That's the biggest thing, is that it's not what I'm interested in trading, because the market doesn't look too efficient, right? So after placing in that high right there, equal highs right there, we come ahead and manipulate one more time at the lows, right? Now we take away this S&T because we've already manipulated again at the lows, and we've taken the low on the left over here on NQ. So now there's no more S&T. We just made internal manipulation sitting right about here. So now we have a liquidity sweep to the left, and now I'm potentially looking for some kind of reversal. This was, in my opinion, the cleanest setup of the day would be on here on NQ. And I would be trading this until, actually, I believe it was on ES right here. So we see the same exact thing, but we don't have those equal highs. Instead, we just kind of have this high. So relative equal highs instead of those perfectly equal ones. So we see that same liquidity sweep. We see immediate reaction, right? Immediately price starts pumping back to the upside. So the way I would have traded this is to wait for the change of the state. And then from there, unless you zoom even into like the 15-second, you're not going to see anything that price could potentially resist, because if we look, this is all low resistance up until this fair value gap right here, and that's the price eventually ends up pulling back on once it hits it. However, it tells us that actually price didn't even hit that, right? But it tells us that we now have no enemies that could potentially push price lower if we start to run to the upside. So I'm just waiting for the change of state right now. Narrative is aligned. We have stacked highs sitting here. I'm at least looking for this internal high when I trade this, right? So we see change in the state on this level, and this is a lower probability setup because there's not really space and confluence with it. However, it's like if narrative wants to go and it wants to go fast, we're just gonna react and get what we get, right? So we get that liquidity sweep. We're now looking to take change in the state entry right here, and then we'll take this to first take profit would be this one, and then most likely I would probably leave run. I would probably semi take profit up here, and we eventually don't get tapped, which is really sad. And that's kind of showing me that we most likely don't want to go to the downside because we're not sweeping this internal liquidity. So it's showing me that there's no clean turtle sweep setup to the downside. So that's why I wasn't looking for a downside trade. However, we start to dump, right? So we start to dump and we place in some kind of S&T on this level, something like that over here on NQ. And now I'm just simply reacting to price. I'm pretty much like, all right, I don't like this. We've just been consolidating all morning, kind of making this weird structure. I don't like what I see, and I don't really think I'm going to be taking a trade until we see a really nice setup that I've been trading a lot recently for, right? So we see that push down to the external level, right? After we sweep that big external level, this is something that usually happens, right? We make it with a very, very, very low resistant run to the downside, right? Complete displacement to the downside, and then we make a very shallow dig into that level. Very, very shallow dig into the level. Even if you go to like the 15-second, bro, that dig, that touch in that area was so shallow that it tells me there's more liquidity down there. Because if we bounced really hard and the dig was very, very shallow, there's most likely going to be more liquidity down there for the market to go ahead and take. So what you do is you wait for the market to now give its high resistant retrace, pulling back into the fair value gap over here, right? Pulling back into the things that are going to push price lower. And then we wait for the displacement lower and we take our trade to the downside, right? There's two reasons why this works. Number one, we make that shallow dig, there's more liquidity to go grab. Number two, we tap into some kind of fair value gap over here. We tap into the enemy of price. And when we tap into that fair value gap, what that tells us is that we need to now go ahead and take the low because we see displacement, right? It's the internal model that validates the external draw. And even though we already swept sell side, if you're aware of what a manipulation leg is, on 99% of reversals, we place in some sort of manipulation leg, right? Where once we want to reverse into an area, we don't just tap it and immediately reverse the straight up, straight down move. We build some structure first. We take the low, we make a fake push higher, fakes out and traps all of the early long traders. Then it goes ahead and stops them out, manipulates them. This is now our manipulation leg. That's a manipulation leg. It manipulates traders' feelings, their positions, their wallets, everything, right? So the market now goes ahead and does that. And it's placing in that manipulation leg that's such a high probability trade. So you simply just wait for the setup to reveal itself, right? And as well, we placed an SMT on that level, which gives me even more confidence, right? And people will look at that and be like, bro, why does that give you confidence if we place an SMT at the low? Because that low is so vital on the higher time frame that there's like such a low probability that we don't go ahead and take it. So by me saying that gives me more confidence, I'm pretty much saying I'm so convicted that that external low is going to get taken on both indexes because it's so important that I think this is the market trying to trick people out. And it tells me, okay, yeah, now I can expect to go and see that low get taken, right? If structure validates it. Now, if prices continue moving higher, I'm not going to take a trade. But once I see my change of the state level right here, after we see some kind of S&T get put in right here, we place in equal highs over here on ES, and then we place in a manipulated high over here on NQ, right? Very, very shallow, but the S&T is there, and it matters because it's in terms of the model, right? It doesn't matter the size of it on like the zoomed out bigger time frame. It matters because it's in terms of the model, right? So equal highs right here, we see change of the state with relative displacement and a fair value. Actually, that's pretty good displacement. And then we see a fair value gap opened up right here. I like to take my entry on the change of the state. So we slap that baby right here, short position on this level, and then stop at that high. and then I leave runners for take my first take profit at the internal model low, right? Now I trade the manipulation leg that then becomes rocket to push price higher after, right? And you can squeeze out a tiny bit more RR on this, and the only way to do that is to use that standard deviation runner to -2, right? So drawing out the manipulation leg gives us this. -2 is perfectly aligned right here. Max take profits you could have hit on this, and I probably would have left a little tiny bit of my position to here as a tester, would be 3.8 R, and that was a very efficient fast trade that happened in 2 minutes, right? 2.5 minutes you saw this trade happen. If you put 500 bucks down, I mean, you're making a lot of bread on that trade, right? So later in the day, there was actually some okay setups, and we ended up seeing a reversal. However, I don't like trading that. If you would have traded this bigger time frame, or like longer time frame, long setup straight here, I think it was okay. However, it's just too much of a snipe for me, right? That's why I didn't want to trade this. It's too much of a snipe for me to then say that I think this all is now going to go ahead and get reversed and then traded to this external draw. Like, for me, it's too much of a snipe, and it ends up playing because narrative was aligned, not structure, but because narrative is aligned, right? Narrative tells us that after we sweep this, we're now expecting to go ahead and take that internal or that external high, right? Or whatever, just complete the internal model. But I didn't trade it because number one, structure not aligned, right? We're going to see those fast, efficient moves when structures align, and that means low resistance liquidity placed into our left. But when we have nothing but imbalances to our left, we have enemies to price, right? And narrative is always going to be stronger than structure. However, when we have the enemies, it's going to slow down the speed of price. That's why price moves so sluggishly, but eventually gets there, right? So it's kind of how I dissected the market today. I wasn't really thinking the opportunity was the greatest today, and I'm excited to see what tomorrow gives us. I'm expecting now the higher time frame to start doing something like this, where we placed in the same exact way that we trade the manipulation leg on the 15-second time frame, the trade that I showed you guys, the same way that we do that, I now expect the higher time frame to do, right? So we just came ahead and we took this external draw and we placed in an SMT on that level, right? So I'm just gonna switch over to here on NQ, right? So we had the SMT, right? Now we went ahead and took the external draw again, placed in another SMT. What this now tells me right here, this now tells me this. It tells me that this now becomes our manipulation leg. This one right here, manipulation leg, to then go ahead and see something like this, where we see displacement through this level. And once we displace through that level, not a sweep, not a push, lower rebounds, I want to see displacement through that level. Once I see that and we invalidate that for value gap, that now tells me that our price wants to go ahead and create this entire microstructure all the way again. Same exact thing we did here, manipulate at a high and then push lower. That can be my trade for tomorrow. And then we can look to leave runners to this, and then eventually throughout the week, we should be able to take this if we get this displacement move. It's all about this initial displacement move. We can get this big initial displacement move, then it tells us I'm at least expecting that now this low, and then all it matters is from what does the market do once it reaches the end of that model, right? So to align internal models with external models, you want to figure out what does the market show us once we complete this model, right? So the first model that's going to get completed is going to be this smaller time frame model, right? So say we take this and we make that manipulation leg, boom, displacement. Now we set displacement. I'm confident that price eventually goes ahead and takes this level, right? And once we take that level, there's two things we can do. We can either sweep, start to move higher, play our games and move higher, or we can now go ahead and displace through that level. Once I see that displacement, I'm confident that we can get some kind of rebound. So this now is the change of the state, because that completion of the internal model, the sweep of sell side liquidity, the displacement through it, now becomes a market structure shift on a bigger time frame. That's the 1 hour, 4 hour. Then we can use that as an order block to go ahead and push price lower. Then this is an order block continuing lower. And then it matters what we do at this point, right? At this point, we can then put an SMT, sweep, play something like this where we now go ahead and trade higher, or we can continue lower. And once we see the displacement, it's the same exact protocol. I'm now expecting this to now become market structure shift on the bigger time frame, maybe like the daily, the 4 hour, and then we continue lower from there, right? This is what I'm expecting to see play out if we can get continued displacement, a second displacement, and a third displacement, right? That's all that matters. It matters what happens when the internal model ends, and that's how you can like fractally align these setups. So overall, I think it was a really great day to just analyze price, kind of look at stuff. You guys, I hope you guys can see the way that I'm actually dissecting the market and that I'm figuring these things out and explaining them to you guys. It's super mechanical and fluid understanding of how price moves. So it tells us when the opportunity is there, all that kind of stuff. Just go ahead and rewatch a ton of my videos and see the exact way that I look into price. And it's super beneficial for anyone that's really that's struggling to grasp the markets on like conceptual and like framework mechanical way, right? So market maker models are always going to be your friend. Always utilize them. It makes price movement literally completely mechanical. So without further ado, I'm gonna let you boys go. I hope you guys can learn something from the video. If not, drop a comment, tell me something I can improve on. And yeah, so without further ado, I'm gonna let you guys go. Peace out.